Hi to all the listeners, and thanks very much to Minds and Money for having us on the show. My name is Rodney Hooper. I'm a partner at RK Equity. We specialize mostly in lithium and other EV battery metals. I'm very fortunate today to have Keith Phillips, CEO of Piedmont Lithium. Keith, good to see you again.
Hey, Rodney, thanks for having me on, and thanks to everybody at Minds and Money. It's a great event, great forum for us.
Okay, great. Well, let me just kick off by saying, Keith, congratulations on having secured two very good hard rock assets at great prices relative to NPV, even using low spodumene prices before the recent auctions, and those prices taking off. Very well done on that.
Thank you. We were fortunate. I mean, we developed a strategy, and I guess I think it's a good strategy, and it was developed luckily at a good time. And we made an investment in Quebec and followed that up with a subsequent investment in Quebec. And have also made an investment in Ghana, both of which we're very, very happy with. So timing was right. The assets were the right assets for us. They're both well-located spodumene assets, which is a core part of our strategy. And there aren't a lot of those in the world, so we're happy to have cobbled together a few.
Yeah, no, it was really good timing. And if one looks at the cumulative production capacity and offtake rights that you as Piedmont have, it's around 500,000 tons per annum of spodumene concentrate. There's sufficient for 60,000 tons plus of hydroxide, depending on what conversion metric you use. Is that the medium-term plan for Piedmont, 60,000 tons of hydroxide or more? And then roughly, what's the timeline?
Well, we'll have, we're working, as you know, on a definitive feasibility study for Carolina Lithium. We'll publish that later this year. We may at the same time publish an updated scoping study on kind of a phase 2 there. We're also working with our partners in Ghana and in Quebec on updated studies for those projects. And fundamentally, our strategy is to be America's biggest lithium hydroxide producer and to produce all the hydroxide from spodumene. So that's why we made the investments we did to control a greater spodumene resource and to own it. We could act as a converter like some of the Chinese do, but fundamentally they're exposed to the higher spodumene concentrate prices we're seeing today. We thought it was very important to own the material. So we do own and have access through offtake agreements to 500,000 tons plus of spodumene concentrate, for life of all these projects, which is wonderful. And that should convert to 60,000 or more tons of hydroxide. And we hope to produce the hydroxide between North Carolina and Quebec. And there's a great need for lithium hydroxide in the U.S., as you know, and we think we'll be a core producer of the material.
Yeah, look, we've seen some very encouraging signs. Redwood now talking about getting up to as much as 500,000 tons of cathode. So looking good, certainly in North America, right along the supply chain. One other thing, Keith, I published a note recently on Piedmont, and if you strip away the implied value of Piedmont's stake in Sayona, Quebec, and Iron Ridge, and then take the equity shareholdings in those companies, the look-through valuation if you look to a stub being, Piedmont's North Carolina lithium project, the implied value is extremely low relative to the NPV of that project, and that's even before you do your next updates. So I guess some of the question viewers could be wondering is how are shareholders protected against an opportunistic takeover bid given the very low relative valuation versus other transactions we've seen go down the market?
Yeah, and it's a great question. And we certainly feel we're deeply undervalued relative to peers and relative to intrinsic value, trading at a deep discount. And we think I must say, we think there's great upside as well in Sayona and Iron Ridge, particularly Iron Ridge, which it continues to be somewhat ignored by the capital markets, but we think that'll change in time. So we do feel undervalued. We are a public company, widely held. So by definition, like any public company, there's always an opportunity for somebody to come in. I think our job is to have the value crystallized in our own stock. and to drive that forward. We're working hard to do that. The studies we think will help with that. I will say, just editorializing here a little bit, I think the M&A activity is fantastic for the sector. You've got two major themes that I would say. Number one, you have important consolidation, people like Albemarle and Pilbara controlling big spodumene resources, Wodgina and Altura's former resource, for example. That's very helpful. I don't think spodumene prices would be in the 2000s if Wodgina and Altura were independently producing today. And also, you've got a lot of new entrants coming into the business. So a couple of years ago, Kidman sold to Wesfarmers. You have Zijin last week announcing a big investment in Argentina, and Plus Petrol in Argentina as well. Utilities in Europe getting involved. That's a great theme. We think we'll see more of that as well. So I think strategic activity will be high. That time may come one day for Piedmont. It hopefully won't be soon, as you say. But I think if somebody were to do something aggressively with us, there would be a number of parties who would take a very hard look. There's a lot of strategic interest in our business.
And just on that theme, though, Keith, if you look at it and who's participating where, what we're seeing is a lot of Chinese interest in Africa and South America, and then outside of those locations, it's really ex-China parties. So, I mean, logically, would you say it's fair to say it would have ex-China interest?
Yeah, I think in our projects, I think there certainly has been China interest in Ghana, and we were competing with a Chinese group, we believe, in securing that opportunity. I think it'd be a lot harder for the Chinese to invest directly in the United States, certainly, and probably even in Quebec. Time will tell. But I think the Chinese are less likely to be active in our jurisdictions. They are thirsty, as you know, for raw materials. Again, the Chinese built their business as converters, buying to some extent carbonate from South America, but more spodumene from Australia. So with spodumene prices rising, they're paying far higher input costs. Now their sales prices are going up as well, but they're not capturing that incremental margin. The integrated producer really captures that margin. That's what we want to be. But they're desperate just to get their arms around material, because otherwise they'll be unable to grow. They don't have enough in their own countries. So I think it's been great to see Ganfeng be so aggressive, CATL be aggressive, now have Zijin come in. It's great, yeah, from our perspective, having the big guys. China is a big market. It's not a market we're going to participate in, but it's a very big EV market, as you know. It'll be a big lithium producer by converting materials bought elsewhere, and I think it's healthy for the industry to have that consolidation going on.
Yeah, we definitely agree on that. Just talking about the spodumene, you negotiated very good terms on your additional 25% offtake rights that you have with Sayona Quebec, I believe. I think the announcement suggested, a floor of 500 and a ceiling of $900 a ton. What's the sort of time frame on that right? When do you expect to be receiving material?
Well, we're working with Sayona now. We had a team of 5 or 6 people up in Quebec last week. As you know, Sayona Quebec, which we own 25% of, acquired North American Lithium, which is by far the most advanced lithium project in North America. It's so far advanced, it's actually built and has operated before, and was fully permitted, et cetera. So there's some work to do to improve it and to bring it back to bring it up to the standard we think makes sense, we and Sayona both. So there's some work to do there. I think the timeline Sayona has guided to the market of early 2023 production is viable. I think it probably wouldn't be sooner than that, but it could take a little longer depending on how much we want to do to it. But I think for relatively low capital cost, incremental capital cost, to put that spodumene into production in early mid 2023 is viable, and that's warp speed, as you know, in this business, and the timing should be really good. So that's kind of our expectation. And yeah, the offtake agreement with Iron Ridge for that spodumene is purely market based. For Sayona, there is a floor and there is a ceiling. And at the time we signed it, frankly, the floor seemed more relevant at $500. I think prices were lower than $500 at the time. And now certainly the ceiling seems more relevant, and we'll see how long that stays that way. I'm very bullish on spodumene prices. I think they could stay higher for longer. I think spodumene market's really interesting. You have, again, Albemarle controlling Wodgina. That's a massive deposit. Pilbara controlling Altura next door, which was an important producer 3 years ago when the market turned down. And having that kind of material controlled by folks who are going to use it for their own purposes, I think is very good for the market. So I think you're right. I think that offtake agreement may prove to be, the pricing may prove to be good for us.
Yeah, and the other, I guess, interesting thing is, more so, as you mentioned, Wodgina is going to be integrated, is looking at Sigma having done a deal with LG and so on. You're now seeing the downstream even securing spodumene. So it looks as if it's really going to be very competitive out there. And I think, maybe balance sheets, will count in that mix. So just in terms of looking back at North America Lithium, I mean, is Sayona Quebec going to blend material with North American Lithium spodumene?
Yeah, so Sayona's asset, their core asset, has been called OTA. And it is an asset that's kind of 15, 20 miles as the crow flies from NAL. So their plan had been, before we got involved, to blend the ores, use about 25% OTA material, 75% NAL material. That is their plan. It has been their plan. That is currently the plan. There'll be more test work done. A lot has been done at SGS Lakefield in Ontario, and it shows the benefit of that. The OTA ore body is similar grade, but it's a 30-meter thick ore body with far less dilution, and it kind of improves the overall recoveries. There'll be more test work done on that, but that is the plan. So I think, given how strong the market is right now, it's possible that NAL will start up on its own, or at first, without OTA being ready, and blending would come later. That is still to be determined, and we're working with our partners on that. There'll be studies that come out. We would think in Quebec you'll see an updated resource statement, an updated reserves, really, out of kind of the Abitibi lithium hub, sort of OTA and NAL, sometime later this year, early next year, and then an economic study to follow that once we've kind of worked out some of the details.
And Keith, Sayona's recent acquisition of 60% of Moblin, does that change the plans at all?
No, at least it doesn't for the time being. That's a good asset. We looked at it. It's in the northern part of Quebec, near Nemaska and Critical Elements in James Bay. It's not that big today, but it has upside potential. It's good grade. So that's outside of our joint venture. So that's a Sayona standalone investment. And I think Moblin's earlier stage. So I don't think it's the same kind of near-term production as NAL would be. We'll see what happens in time. I mean, Sayona has a strategy to produce lithium hydroxide in Quebec. We have a strategy to produce lithium hydroxide in Quebec. Those are currently independent strategies, but we're close friends, and we talk about a lot of things together. So who knows? I wouldn't be surprised there's a kind of broad, kind of made in Quebec solution where we come together and produce a very large hydroxide facility in Quebec. There are other spodumene resources there, as you know. At least a couple of them appear to be focused on being spodumene producers and not hydroxide producers, so they could potentially have the material converted at a large kind of world-class facility on the St. Lawrence Seaway. So that's something, there's lots of time to work all those details out.
Sure, and I see Iron Ridge is progressing well. We're big fans of DMS only. When can investors, I know your initial investment to secure half of the project involved completing exploration and feasibility. When can investors expect to see an updated resource and feasibility study, NPV, all those things?
So I think, you're right. The IRR team is working hard on the ground. They have 5 rigs in the field at Ouya, kind of in their kind of Cape Coast portfolio in Ghana, which is, we think, a great asset. So they did announce drill results 3 or 4 weeks ago that were terrific. So presumably there'll be a resource update coming with I would think, a pretty meaningful upgrade, but that won't be the last resource update. We think this will become quite large. It's 14.5 million tons at 1.31% today. So I would think the next resource update should take it over 20 million tons. And we don't, it's too early to tell what the potential is. Is it 30, 50, 70, who knows? But we think it can be very large. It will be DMS only. It's very well located. Our timing, you're right, we're earning into the project. So the first stage is for us to fund exploration and a DFS to a total of $17 million. I think our timeline to complete that is 2 years. It might be 3 years. I forget, but we're going to move as fast as we can. We had a good call with them earlier this week, actually. And we're kind of working with them on a daily basis. So we're excited about that. And then the plan is for us to fund the first 70 million of capital for the plant, essentially. And again, I think this is a project that should be relatively straightforward to build, and should be a high quality, low cost, low capex, low opex facility a mile from the Atlantic Ocean, 70 miles to the port by a major highway, but really attractively located. Interestingly, we could get material from Ghana, from the plant in Ghana to our site in North Carolina for less transport costs than we can get the material from Quebec to North Carolina. That's the benefit of being so close to the port. So we're excited. Iron Ridge is its own independent public company. Obviously, they're doing a demerger. They have gold assets in Chad and the Ivory Coast. They're demerging into a separate entity. And I believe, they announced they're going to list on OTCQX in the US, which is great. I think there's some other things going on. So I think you'll see a pretty steady news flow out of them beginning later this year.
And of course, if you're talking about that sort of uplift in resource, Keith, then there's a lot of scope for upside on their NPV then, which they used the much smaller resource and still had a fantastic IRR, even with a reasonably short mine life. The NPV was very solid.
It was, I forget what lithium price they used in that study, but
650, I think.
Yeah, I think that's right. So presumably they'll be using a higher price now, given what's going on in the spodumene market. And I think longer mine life for sure. Throughput, I think I would expect will stay the same, 295,000 tons a year. That's a big plant. So mine life will go over 10 years if they're over 20 million ton resource, and again, grow from there. So with longer mine life and stronger prices, the numbers are going to be fantastic. This is a really special project, and I think it's a company run out of Australia with a technical team in Africa, but listed in London on AIM with assets in Africa. It's not currently ideally positioned for the capital market. I think they're going to work hard to change that. I personally think if this were a standalone lithium business, spodumene business listed on the ASX, the market cap could be double, triple, quadruple very easily, looking at some of the peers. So we're very optimistic and see big value in IRR.
Absolutely. And just moving back to North Carolina, I saw there was a recent Gaston County Ordinance update that was encouraging. It's what were the key parts relating to lithium mining and chemical processing in the area?
So, it's interesting. Gaston County has a long history, as you know, with spodumene mining. All the lithium in the world came from the Carolina tin spodumene belt from the 1950s to the 80s. There was a big mine in Bessemer City, a couple miles south of our project, that closed down in 1998 or 9, operated for a long time. But those were developed in the 50s when mining laws were different, and the county really didn't have an updated set of rules and guidelines for people to follow, and people like us, and also people like the commissioners and others in the county. So they had to develop that, and they did, and they hired outside counsel who we think did a really good job. They sought input from people in the industry to make sure everyone understood what was viable. And fundamentally, we're very happy for them to have formalized these new ordinances, which spell out a series of very common sense rules. So they're prohibiting people blasting at nighttime. We think that we never planned to blast at nighttime anyway. We don't think it's a safe practice. So we weren't intending to do it. They're prohibiting blasting on certain holidays. That's completely sensible as well. Happy to do that. They have certain berms they want people to construct around activities, fencing certain heights. All, again, common sense. For the most part, things we already plan to do. There'll be some minor adjustments, and it may cost a little bit more money here or there, but that's okay. It's the right thing to do. So, we're in the early stages of that process. We've applied for our state mining permit. We'll have a public hearing on that that I think everyone wants to have. That'll be at some point in November. And we think that'll be a good hearing focused on kind of the substance of the issues. And then the permitting process will run its course. We'll reply to questions as we're asked. And we're optimistic we'll receive the permits and ultimately the county approval during 2022.
Okay, that's great. And just North America again focused. I see some announcements from Ford and SK. I think it's Blue Oval, it's called, with 129 gigawatt hours of planned cell capacity. And as I mentioned earlier, Redwood talking about 100,000 tons cathode, I think by 2025, and 500,000 by 2030. Lots of ambitions around recycling. And of course, there will be rejected cells and so on that will supply that, but still going to need a huge amount of hydroxide if they're going the SK route. So obviously positive for you.
Yeah, it's really massively positive. It all is. I mean, you've been following the industry very closely for years, and so have I. And the Benchmark has done a really good job with these kind of tracking gigafactories, battery gigafactories, and the U.S. has been the laggard by far, obviously, and that's okay. I've always had the view that the market would speak and the time would come, and it's coming. And Tesla's been a leader here, obviously, but LG has been making big commitments. General Motors has been making big commitments. The SK itself has been making important commitments. The Ford SK, kind of the Blue Oval SK announcement was massive. I think the number was, they're going to need, I think you said the number, but they're going to need 100 to 125,000 tons a year of lithium hydroxide for those three facilities alone. And that's more than essentially all the projects currently planned to produce lithium hydroxide in the U.S. could possibly produce. So it's interesting. You've also seen, and you mentioned Redwood, the missing link in the U.S. has been cathode capacity. Redwood's very focused on that. And I think for a couple of reasons. I think Redwood's business is recycling principally, and that's important. But fundamentally, the recycling story is really a 2040s story, in my view, and to some extent a 2030s. There will be some, it'll be important. We're going to get involved ourselves, but there's not going to be dramatic revenue from recycling until we have a lot of used cars, 10 plus year old cars. And we're just not going to have a lot of those for a long time, in my view. But the cathode is critical for kind of greenfield production, and Redwood committing capital and their know-how to that is really important for us. I think everyone will benefit from that. We think you'll see other cathode companies invest aggressively as well. And fundamentally, as you have written, the U.S. is a kind of SUV and pickup truck market, long-range vehicle market. It'll be hydroxide dominant. Our project will be pure hydroxide. It is interesting to see more and more people talking about hydroxide. Standard Lithium had a nice announcement out this morning. Thacker Pass also last week. Everyone's talking about bringing more capacity to the U.S., which we desperately need. And if we all succeed, we're still going to be short and be requiring lots of material from outside. But fundamentally, there'll be great demand in the U.S. It'll be for hydroxide. We think the car companies and battery companies ultimately will prefer spodumene sourced hydroxide, just given the probability of success. If you're committing billions of dollars to build battery plants and automotive plants, and there's any risk that the lithium source you commit to might not be commercialized, and I think that risk exists in a lot of other projects, that's a big risk to take. That's a risk I don't think people will be excited to take. So we think we're really well positioned. We're really excited. We look forward to bringing more news as to how, and more numbers around how we're going to become a even bigger factor.
Yeah, look, I think with the Redwood, they are expecting a lot of, depending on yield, but as new battery plants get up and running, depending who has the rights to the, reject cells, I think there's going to be quite a lot of supply in that. But obviously, if that doesn't become battery grade hydroxide when you recycle it, but it will be an element of supply. Yep. So we'll see how that plays out. We recently interviewed Ryan Castellou from Adamus, and the estimate on, I think, CATL on their high nickel was like a 50% yield, so it can be pretty generous for the recycling industry, but we'll see. Look, it's always tough on the new chemistries. I think just as a commentary, a separate, is a lot of analysts they keep looking at the ultimate installed batteries of EVs and so on as to demand, but that's not really where they should be looking. They should be looking at the cathode level and looking at how much is ending up on the floor in terms of rejected. And that differential, I mean, Ryan's saying, you can, in his view, I think on some of the high nickels at the moment can be double what the installed is. So that's something that creates a disconnect where, some people think we're not in trouble for supply, but actually we are when you look at the cathode level, but that's a separate discussion. Talking of the spodumene, Keith, your company presentations, you highlight a carbon footprint for hydroxide from spodumene at the same level as what hydroxide would be from South American brines, carbonate converted to hydroxide, but with a smaller land footprint and less fresh water. How's that possible?
Yeah, no, this is a very important subject for everyone these days. It's an important subject in our communities. It's a very important subject from a automotive company's perspective, and it's very important for institutional investors. So we commissioned a group called Minviro, who I think to do a life cycle analysis or assessment of our Carolina Lithium project. And Minviro is very focused on incorporating Scope 3 emissions into their studies. So you see a lot of people talking about their emission profile, and they talk about Scope 1 and 2. They don't talk about Scope 3. So in the Atacama Desert, so where SQM produces lithium hydroxide in the US from brine, the good news is they use solar evaporation. So by definition, that's a relatively carbon-free process. That's the good news. The bad news for them is they need substantial reagents in their process, and those aren't in Chile. They have to ship them in from far distances. So they have to ship soda ash, for instance, in from Wyoming, and we'll be shipping soda ash in as well, but it's far less transport distance and far less imposition. So when Minviro does their studies, they look at SQM, they look at a series of different projects in Australia on the spodumene side, and really what they've been looking at is the incumbents who are producing spodumene concentrate in Australia, shipping it to China to be converted in a sulfuric acid roast process. And if you incorporate all the emissions in that process from a carbon perspective, we have less than half the emissions of the Australia to China route, and very comparable to SQM in Chile, which was a surprise to us, frankly. We're very happy about it. Part of it is that we've made some really important adjustments to our process. So we're going to use solar electricity for all of our concentrate activities. That wasn't the initial plan. We're going to replace a lot of our diesel truck fleet with electric conveyors, which will be, and we originally did that not for LCA purposes and emission purposes, but to lower operating costs and to lower kind of the noise and dust profile of our project in the area we live in, but it has real benefits there as well. And our location is just a great benefit at every level, from a cost perspective, from every level. Everything we'll need will ship shorter distances, in our case, than anyone else's. The other 2 points you mentioned, the other footprints, when Minviro looks at it, they look at carbon, land, and water. So our land footprint is dramatically less. I think it's 1/70th of the land footprint of, say, SQM in the Atacama. And largely that's because when you have a solar evaporation process, you need to have these massive evaporation ponds, which are quite shallow. If they were deep, the evaporation would take a lot longer. So they take up massive footprint, 70 times per ton of hydroxide capacity. We'll take up. That's just incredible. It's big. Those are big numbers. And then from a water footprint perspective, water impact perspective, that's a process that pumps brine water from the aquifer and evaporates it in the driest desert in the world. That requires a lot of liquid, A, and B, they're doing it in an area that's very arid. So it's the driest desert in the world. And we'll introduce some new data, public data, in our upcoming presentation, which will kind of make that comparison, not only how much less water we use, but how much more we have available. North Carolina is resource rich in many ways, but certainly from a fresh water perspective. Quebec will be as well, and so is Ghana, interestingly. So Yeah, no, the project's exceptionally well positioned from an environmental perspective, and from a corporate perspective, we've done a lot of work on the kind of governance perspective and sustainability perspective, and we'll have our first sustainability report published later this year. And it'll be somewhat aspirational in that we're not currently producing, but it'll address kind of our strategy on all these factors, and we think position us very well with investors and ultimately customers.
Okay, great. That's interesting and exciting, Keith. Lots coming up, and many catalysts, I'm sure, in the next few months, which is great because we're living in unprecedented times now in the lithium market. So I'm sure the viewers will be keeping an eye out and looking for updates. Thanks very much for joining me on the show.
Thanks for inviting me. I really appreciate it. And yeah, I agree. I think I'm not sure we're at a new normal. Prices are strong right now, but I think the 2020s are going to be a lot of fun for lithium producers. So we look forward to being an important part of that equation.